Larry?
Thank you. Perhaps you could tell us a few things about how TradeTech 2010 has benefited your product and whether it's been worth coming, how the show has benefited you.
Sure. Well, TradeTech 2010 has been a great event. For us, it's really good to see how the market is starting to recognize not only what we've been bringing to the market, but also the various awards that we've been getting. So no, it's been a great event all in all. I think it's really benefiting how we are placing ourselves on the market.
Brilliant. Can you tell us a little bit about your company, where the product's placed, what you do?
Sure. We provide connectivity to the financial markets, and as such, we provide connectivity into the various centers of liquidity and provide a platform for our clients to interact with the venues. And we have presence both in Europe as well as in the US,
right,
in the main points of presence of the various markets on which our clients trade, such as NASDAQ, NYSE, BATS, Chi-X.
Right. And how specifically do you relate to the Forex market?
Right. We have been providing connectivity for the Forex market for quite a long time, and providing connectivity into the multi-bank portal, which needs are starting to mimic the needs of the equities market.
Okay, and you're seeing a crossover in the trends in the Forex market, in the equities market coming into the Forex market, and perhaps vice versa. How are the two beginning to relate to each other?
Definitely, and we are seeing exactly the same trends in the Forex market as the trend that we've been seeing in the equities market for the last few years. And there's definitely correlation in between the way those markets are evolving. The need for latency, a need for higher bandwidth is definitely increasing in the Forex market.
And where do you think that's headed in terms of fragmentation? How do you think the trends are actually specific trends are coming together?
Right. Well, I think we are seeing evolution in the Forex market, not necessarily in terms of fragmentation or in terms of change of the venue, but more importantly in the terms of technology that the venue provide to the participants, in terms of increase of ticks that the venue could provide to the participants, so that the spread could be shaped differently for the market participants. That's definitely a trend that we've been seeing, and I believe that technology and the infrastructure that we are able to provide to these markets by providing better latency and lower latency in between the markets and the participants is definitely going to change the way that those markets are behaving.
A couple of years ago, we were hearing, 1 millisecond is the best speed. Now we're moving to microseconds, and now we're moving even to nanoseconds. Can you tell us about, that trend and how fast we're going to get?
Definitely. I think the question is usually, well, can we get down to more than nanoseconds? And really, we've been in this industry and in the low latency game for quite some time now. By doing this, we've learned a few things. And one of them is measuring and understanding what is the latency in between what is the latency. And so we've been really looking recently at what is being measured, between what is it being measured, so that we can start talking a common language in between the various suppliers of technology in this industry. So going down to in between millisecond, microseconds, what is it that we're really talking about?
Right. So sort of a common standard. So
exactly.
Right. And are you seeing an increasing trend towards high-frequency algo trading in the FX market as well?
Yes, and I think, again, technology is backing that up. As the technology gets there and as the lower latency, we can see more and more algorithmic trading coming true, and as well as electronic trading and algorithmic trading in between various venues. And also, the blend with equities is also something that is happening there. We are seeing more and more desks that are matching up equities and Forex to create more complex algorithmic trading, again, brought together by technology.
So sort of arbitrage, equities arbitrage based on Forex values and that kind of thing?
As an example, yeah.
Right. That's interesting. And, leading on from that topic, post Lehman, what specific changes did you see that the crisis brought about? Did it accelerate any particular trends and so forth?
Right. Well, it most importantly accelerated the regulation. I mean, regulation was something that was on the agenda through MiFID, but it definitely changed the way the regulator looked at the revision of MiFID. It also changed the way people looked at their counterparties. Mm-hmm. It used to be not so a fragmented market, and people used to have only a few counterparties. Now, people are hedging their risk. They're trying to go onto more counterparties so that should something happen, their
risk will be limited.
Limited, yeah.
Okay, and any other thoughts with regards to your provider specifically and the FX market in particular?
Well, we are looking at providing more lower latencies towards that market and providing better connectivity into the venues, so that as the algorithmic traders are looking at arbitraging in between the venues and providing those crossover in between equities and Forex, they can benefit from a technology that enables them to trade as quickly as possible on those markets.
Okay. Emmanuel, Carjat, thank you very much.
Thank you.